Good morning. Good morning. Welcome to Wednesday. Today is March 25th. And here we are for our pre-market analysis. And if you're new to the channel, please subscribe to the channel. Hit that thumbs up button, like this video. And down below, there are a few more links. Find the link for Discord. Come and join our Discord community for live trading from 9:30 a.m. to 11 a.m. Eastern Time. Okay, we can get right into things right now. We have some numbers coming out right now. Import pricing month over month. This is a delayed number here. 8 days due to the government shutdown. And I don't think that's going to have much impact on the markets right now. I think you're getting a little pop pre-market on the broader markets because I think there's a lot of peace talks going on. However, I would not get overly excited about that. So let's take a look at things right now. And we'll get right into what we typically do, rinse and repeat. So if you're coming here and you normally come here every day, it's rinse and repeat. That's what trading is about. Find your routine, rinse and repeat every day, and stick to your routine. So we're starting with the VIX lately, and we pay attention to the VIX. Whenever there's geopolitical unrest, you want to go to the volatility index and wait till it calms down so you can get comfortable with whatever kind of trade book you have with trading your equities, your daily routine, your swing trades, your scalping, whatever process you have for trying to make money. I had a little gap down here. Looks like it's trying to fill right now, this 26.97 from yesterday. We are still above this 23.99. I would like to see the VIX below this 23.99, which is the 20-day moving average. If you get below that 20-day moving average, I think things could pick up some steam on the upside for equities. But you could see right now, we're still kind of range bound here, right? It's not making one move or another. This big this big red candle that we had here the other day was when there was an announcement about a 5-day ceasefire going on in Iran, right? However, if you go back and look, aside from that big candle one way, we are still range bound here, right? Still above the 20-day moving average. You want to see the VIX below that 20-day moving average in order for us to be confident that the equities can start moving higher again. So let's take a look and start with our ES. ES still failing this 200-day moving average here. This white dotted line that I have here is a regressional trend line here that I have from the high of January 27th of this year. It's failing that right now. You could see here this big spike. It's the complete opposite of the VIX, this 5-day ceasefire announcement. So we are heading lower right now. Here's a point of control level that I have open from yesterday. So if you hone in really tightly, why do I have it open? Because this is where the market closed right here, and the market didn't come back and touch it after post-market or pre-market, right? So I leave that open. So we have a little tiny open point of control at 68.0571 down below there. So we are feeling the 200-day moving average. I'd like to see us, in order for us to continue to get upside today, regain this 200, regain this midline regressional trend line, and start moving into the 6704.14 level, which is the high from September 2025. And then if you can get above that, you can move back into this filled point of control level that we have at 67.32, which is just underneath the 20-day moving average, 67.48. This 60, we're kind of line in the sand here. 66.81 is a line in the sand, that 200-day moving average. I was saying that yesterday. 200-day moving average is kind of line in the sand for equities, moving averages, futures, ETFs, everything. So you have to pay attention to that. It's a big tool used by all algorithms, traders, day traders, institutions. So you got to pay attention to that, right? So we are failing that right now. I would say you come back down here, you could get some support at this open point of control at 66.0571. If you lose that, you have a lower end regressional trend line. You come down and tap down here at 65.44.95. Below that, you have 65.23, which is August of 2025's high. If you lose that, I don't have much down below here. I mean, you could use some level of support down here, which is the pre-market from Monday at 64.78.10. If you lose that, I think you've got 63.71.75 down there for support, which is September of 2025's low. But you could see, though, like I said, right now we are just kind of range bound here. We're trading in this channel all day. So the way you should be trading today is quick moves. Don't look for, quick ins and outs of your trades, and don't look for any big, long lasting moves. I would just take your profits if you have them and get out of your losers if you have quick losers, right? So let's get a look at the SPY. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, hit that bell for future notifications for the videos. Go down in the links below and find the Discord link and join our Discord community for live trading from 9:30 a.m. to 11 a.m. Eastern time, where we go over a 5-minute opening range trade for Tesla and attach it to options trading, right? So very basic trading, but come on in and I answer any questions that you have, not just only pertaining to the options trading. So same thing on the SPY, a mirror image of the ES below the 200-day moving average. You have to hold these levels here. We do not have an open point of control here from yesterday. Why? And I'll show you why. So we only have a point of control as if here's the close, this red candle here. I'll make it bigger. Here's the close. This candle here on the post right here, it came down and it touched that point of control. So I do not leave that open. Okay, now what the yellow line that you are seeing there from yesterday, this yellow line right here is the close from yesterday. So that's what you're seeing there. It's not my yellow line that I drew. This yellow line that you see right in here, this is the plotted point of control that we have there, right? So you can see a point of control starting to plot here in the pre-market right now, right? So if the market opens up and it starts heading south, this point of control will be a level here until it comes back up and hits it. But again, if we don't get above this 200-day moving average sitting at 660.96, I'm not looking long. You could possibly think that if the market pops in here, you can use this to pop and fade and then look for your downside. However, you do have a monthly high down here from August of 2025 at 649.48. That if you did lose yesterday's close, you come down here and you could use this as a good support level, right? This also, you also down here from yesterday's close, you also have October's lows giving you some support down here at 652.84. And then if you do lose that August 2025's high, you've got that July monthly high sitting at sitting down there at 639.85, right? So you could come down here and touch Monday's pre-market low. This is before the ceasefire talks right here, right? So yesterday, though, just so you know, Israel came out to speaking about a 30-day ceasefire, right? And they had all kinds of stipulations on there as far as what Iran is supposed to do for the future, as far as no more going after nukes and the materials that would potentially give them any kind of nukes. So, big stipulations there for that to happen. So anyways, let's get into the NASDAQ. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video as we try to build our community here. Same thing on the NASDAQ here. So the NASDAQ fighting that 200-day moving average as well. And so here's something here that we'll plot right now, right? So again, here's another scenario. Here's the point of control. Why did I not mark this as a point of control? Because this green candle is after hours. This gray area is after hours. Here is regular trading hours. After trading hours, this point of control was hit. So I do not draw a point of control there. Now, you could draw it anyways, and you could use that as a level of support if the market gets down there, but that's not what I've been, using my data for a long time. So anyways, still have to get above that 200-day moving average. Same thing. We do have this open point of control at 24,905.73 sitting here from March 18th. It is sitting below the 20-day moving average at 24,745.34. If we do continue to drop lower, you do have some support down here at 24,306.25. which is August 13th, 2025's high. I do like to move my previous year on the left side, so I got to move that over. And then below that, if you continue to give back this move from yesterday, and then you lose, I would say if you lose this 24,175, you're gonna give back this pre-market move from the other day, and you come down. And the first level of support you're going to have here is July 31st, 2025's high at 24,041.75 cents. And then if you lose that level, then you've got some support down there at November's low at 23,904.50. Below that, you've got a monthly low from August of this year at 23,768.27. Let me move this over to the left here. And that is going to, that's going to be kind of a line in the sand too. If you do get that kind of fall out there, I think the next thing I have here, the next kind of support I don't have till 23,371.50. Below that, I don't have anything down there until 23,112. So I think for something like this to happen, there's going to have to be some earth-shattering news, negative news rather, that's going to knock the market all the way down here. So hopefully we don't get that, but those are the levels that we have on the downside. On the upside, if you do regain this 200-day moving average that's sitting here at 24,517.14, you can move into the 20-day moving average at 24,744.64. Above that, you can close that open point of control. We have a 24,905.73. Above that, you've got September's high at, that's a September 2025 high at 24,979.71. If you can regain that, you can move into the 50-day moving average at 25,118. So hopefully we can get some good, promising movement there. Hopefully there can be some good announcements on these peace talks, and then oil can continue to move south. If oil moves south, that's going to help with the inflation data that's going to be coming out shortly. And let's go back and take a look and see what we have there for the rest of the week. I didn't really cover that. Thursday, unemployment claims, natural gas. We should pay attention to natural gas there. Friday, and I don't know if I see anything. This may actually do something. I'm not a big fan of the University of Michigan Consumer Sentiment Report, because I think that the report is not. It's always biased, for their political views. So I really don't pay too much attention to it. However, based on everything that's going on right now, I think you're gonna have to put a little weight on that number there. So we'll see what happens, when those numbers come out. But again, just like everything else, we are kind of range bound here. So you got to be careful with your trading that's going on for today. In and out of your trades, I would recommend. Qs, similar on the Qs, below the 200-day moving average, sitting at 593.42. You got a lot of flash wicks, which is just showing you it's pre-market, not a lot of volume in there. If you want to move higher, you're going to have to get above this monthly low from February of this year, sitting at 594.76. If you can get above that, then I'd like us to move into the 20-day moving average, sitting at 601.11. If you do move into that level there, I think you need to get a little resistance up there. On the downside here, here's the same thing here. Look at this, just choppiness here. No open point of control. We did come back down after the market closed right here. It came back down and it hit those levels. So I do not have that as a point of control level. However, you could very easily, mark that down there as a support level, right? You could see how many times it wicked down there. 1, 2, 3, 4, 5. You can even call that 6. So 6 times it came down here to this 584.23 level. So if the market does pull back, you could say that this is a decent level, which is also yesterday's close, that it could support. If you lose that, 583.32 is August monthly high. That's right below it. And then below that, if you lose it, you have a monthly low from November at 580.74. Below that, if you lose that, you have 574.63 is July's monthly high. That would give you support down there. So let's get into Tesla now, and then we will finish things up. Tesla, getting a nice little move on Tesla. I think you got to be careful, though. If you are long on Tesla, I would say it's going to get a little heavy here right now. One thing that I looked at right now, you've got this 20-day moving average is now inverted from the 200-day moving exponential moving average, sitting down here at 394.61, and 200 is sitting at 395.16. So they crossed over, right? So you got the 20 is crossed over now on the downside there. So let's just take a look at our moving averages here. So still sitting below the 20 and the 100-day moving average. So I would say if you do continue to push up into this level, 394 to 395 level could get a little heavy there for you. We still have this open point of control level sitting at 318.9782. That's from the 18th, right? So if you did push through that, I would suspect that you're going to get resistance up there as well. If you do get some kind of crazy push through that also, I have next resistance level sitting up here at 404.76. So that would be nice if Tesla does do a typical Tesla move where it doesn't care what the rest of the market's doing and it continues to push higher. On the downside right now, let's take a look at the point of control, see if we have anything open from yesterday. As far as point of controls from yesterday, we do not have any open point of controls from yesterday. Just like I explained on the previous Qs in the NASDAQ and the ES, here's your point of control right here. Here's the regular markets. Here's after the market. We now touched that point of control several times, so there is no open point of control down there. However, regarding our point of controls, we do have one more point of control still open down here at 334.07 from September of last year. So you have to keep that in mind. We did fill this one from September 11th. That did get filled over here on Monday, right, on pre-market. So good news is we have one left here. Bad news is it's 334. It's $60 lower. Okay, so that's that. But good news is we have a lot of open point of controls above us. We have an open point of control of 455.12, and that was from January of this year. Above that, we have 478.39, which was December 26th of last year. So, like I said, I've been saying it all along. Sometimes these point of controls take a long time. We had an open point of control from last year it took 7 months for it to fill. As far as our levels today from Tesla, I would say that if you are a swing trader and you are currently long right now, I would say it's probably going to get a little heavy up here right now. So maybe take some of your profits, maybe keep a runner or two or something like that. But I would say that you're going to have to watch some of these levels right here. This 389.87 is a pretty decent level. If you hold this level, maybe you could continue to get some more upside. If you lose that 389.87 level, I think you come down here to February's low, 387.53. And then if you lose that 387.53, I think you've got a weekly low down here at 385.39 from March of this year, March of this month rather. And then below that, you could probably come down here. You could probably use this point of control as a support, even though it's not a open point of control or a fill point of control that we had here. But you could use this as a certain level. You could see right here. The way I typically mark my support and resistance levels is I use a level like this was a high right here, rejected here, rejected here, rejected here, and now it's support, right? So this level right here, I would say this 385.39, if the market did pull back, this could be a good level of support, right? A little break and retest to this level. And then if you lose this level, I think all bets are off, and I think you're going to continue to move south again, right? So that's going to be my view on Tesla there today. As far as my strike prices I'm going to use for today, I'm not going to use today's expiration date. I'm going to use Friday's. I'm going to have a 395 call to start the day. You see we close at $1.87. However, we are right now $7 higher, so I anticipate this to be in the $3 premium range. I'm going to have the 390 puts also, and even though the puts closed at $10.45 because we're $7 higher, I anticipate this to probably open up probably $5 range, maybe $4 range. This is what I'm going to start with. The expiration dates are going to be for tomorrow, Friday rather. As far as the 5-minute opening range trade, it's been very choppy. I'm not going to, it's been a very difficult trade, right? You got a big move. Your moves are pretty much, over in the first 25, 30 minutes of the day, and then you're chopping around here. But these wicks are very difficult to trade. Yesterday's trade, you had there 376.30 for the low, and you had a $7 range, 383.26 for the high. Once you broke that, your initial move, you could have gotten $1.50 out of that initial move. Not a great risk reward for me. When I get this big move right here, that initial break scares me because I think it's just too extended. The thing is that here's where I get conflicted. That initial move gives you that 5-minute range, and we broke through that upper Bollinger. I like when you break through a Bollinger. That gives me the confidence that there's strength and there's going to be some more upside when you break through the Bollinger. Once you lose that Bollinger, then I think, okay, well, the move in that direction is done, right? So you could see right here, you lost that move, you lost the Bollinger right here at about 9:10, right? 40 minutes after the market opens. And then look what the market did. Kind of chopped around all the rest of the day, right? So you did break the Bollinger here. You lost it here too. So I would have been, if I was long, I would have been out of my trade right in here. As a matter of fact, I think I got long. I think I got out of my trade. I may have even gotten short, right? But then you got that big push again right in here, right? You could have gotten long again, right? So it was a very difficult trade yesterday. I made money, but not, I grinded it out all day, just looking for my trade and my levels. But, if somebody's a swing trader, they're very happy this morning. But I would say I would be looking to probably take some of my profits this morning because I think that may get a little heavy. I think that, again, we're very sensitive to the news. So pay attention to your news. You're getting some big spikes during the day. Right here yesterday at about 120, you had some big news that popped the market. So you got to be careful of everything here, especially trading in the afternoon. What I've been finding is, the markets change. The market used to be, you can, have some good volume right here. Now the market's starting to give you some good consistency, at this point of the day. So after 1 o'clock, you're getting some good solid volume, right? And this is what you want. If you're trading options, you want good solid candles, right? I'll tell you, when you're trading options, what absolutely kills you are wicky candles, right? No direction. It just destroys your premium pricing when you get wicky candles like that, right? What do I mean by that? So your premium price, if you think your market's going higher, you're buying it here, right? Well, when you get a wicky candle and it starts moving higher, let me show you what I'm speaking about. So like this candle right here, let's say you bought it at $1. I'm just going to use an example. Let's say I bought it at $1.87 right here, or let's say right here, it shot up here. This premium could have been at $2.30. Well, if I didn't get out right away, next thing you know, this premium could have been down here at $1.40 before I knew it. And that's not what you want. You want an opportunity to get out of your trades if you're wrong with a minimal loss. But when you have these wicky candles here, it makes it very difficult to trade. So pay attention to recognize if the volume's there or if it's not. I saw some stat yesterday that the retail trade is kind of sitting on the sidelines right now until this war stuff is over. And the retail trade is kind of what keeps these wickiness from stopping, right? So when you see the wicks like this, that means there's not a lot of retailers involved, because the truth is the institutional guys, they don't trade throughout the hour. The institutional guys that come in at the beginning of the hour, they trade for the first few minutes of the hour, then they come at the end of the hour to clean everything up. So everything in between are typically guys like you and I. So anyways, that's pretty much going to be about it for today. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. Go down in the description area, find that Discord link, and hit that Discord link. Join our Discord community so you can come and see some live trading from 9:30 a.m. to 11 a.m. Eastern time. If I don't see you in there, I'll see everybody tomorrow for the pre-market. Have a great trading day. Lower your lot size. Be smart. Talk to you soon.